Hello students, welcome to CivicCentre IAS. As part of daily economy series, we have a discussion on stable coins. Just like your cryptocurrencies, these stable coins were pegged like to any fiat currencies or any standard commodity, just like gold. If you look at historical evolution of money, especially in earlier cases, it was barter system. Later, it has developed into the coins, whether it should be copper or gold. After that, it has made into papers, regular note papers, and after that, it was went into digital form, digital wallets or e-currencies, and now it is a new trend, right? Nothing but your stable coins or cryptocurrencies. Why this was recently seen in news? Because some countries have come up with a new type of regulations, especially if any company wants to create a stable coins, obviously they need to take a permission from these entities. So that's why this topic is very relevant for your currency management, especially money market instruments. So if you look at the discussion, Hong Kong recently is set to enforce a new standard stablecoins ordinance requiring especially for issuing fiat referenced stable coins. So what is fiat currency? Fiat currency is nothing but the currency which was issued by the government authority. In India's case, it was Government of India, right? It is a fiat currency. It is nothing but to regulate stable coin issuers who are issuing these coins, and at the same time make sure that they should maintain transparency in issuing the coins and protect investors and even prevent financial risk like money laundering and unbacked digital assets. There are numerous cases in India also, especially if you look at cryptocurrencies, especially these were created through digital ledgers by using blockchain technology. But there is no proper regulation in India. Since from last 5 to 6 years, there is a intensive discussion going on whether these should be regulated or not. From Government of India's perspective and at the same time regulatory bodies like your RBI. So in this context, it is very important for our examination. So what are stable coins? Stable coins are nothing but your cryptocurrencies. But it should be backed by assets. Whether these assets are pegged to any fiat currencies or gold. So that is the simple definition for stable coins. After Donald Trump become as president for the second time, the United States has passed a act also, GENIUS Act in early 2025 to made stable coins one of the fiat currencies in official currency, so that these stable coins will be pegged to US dollar, so that the price fluctuations, especially whatever the value of these stable coins, will be determined by these US dollars. So why do stable coins require regulation? What was the need? The first one is widespread use. If you look at the countries which has very low financial credentials or defaults, they are mostly using these stable coins as an alternative currency. So if you take an example of Afghanistan, Nigeria, these countries' currencies are very weak. So obviously, they have either completely or partially replaced their domestic currencies with these type of coins. Second one, market size. According to some estimates, almost $250 billion US billion dollars was the worth of these stable coins. And out of this, $160 billion was from USTD. It is also one of the stable coin. And next one, lack of transparency. So the companies or issuers who are producing these stable coins, obviously they have to be backed by some assets. But whether these assets were really existed or not, we don't know. So obviously the investor trust will be eroded to invest in these assets or these stable coins. That is also one of the major issue. Potential impact on fiat currencies. Right now we are using central bank digital currency or EURP, right? To counter these type of cryptocurrencies, the RBI has come up with a CBDC. It should be in the retail and at the same time wholesale. Wholesale should be used for your banks and other non-banking financial companies for their transactions or securities to be covered. But these retail will be used for individual persons. Let's suppose in future, these individual persons are completely using fiat currencies without any regulation or any cryptocurrencies without any proper regulation from government side. Then obviously there is a higher impact on fiat currencies, nothing but the government backed currencies. Risk of collapse because there is no proper regulation mechanism available in India, and at the same time rest of the world countries are also looking for proper regulation mechanism. So there is a high risk of collapsing this, and also there is a need for oversight. Obviously you need to regulate properly these type of currency. So each and every time whenever the currencies or money supply is changing, since from ancient times, there is a mechanism, right? There is a regulation. So in India's case, RBI will regulate money supply. In a similar way, RBI has to come up with another new cryptocurrency regulation framework so that it can be useful in the future also. So if you look at practice question, with reference to stable coins, consider the following statements. The first one is stable coins are always issued by central banks. They are typically pegged to fiat currencies or commodities. The value of stable coins remains fixed at all times. The first one, the stable coins are always issued by central banks. It is not correct. Even sometimes even private players also can issue. They are typically pegged to fiat currencies or commodities, just like we have discussed about whether it should be US dollar or Indian rupee or gold standard. So whatever it may be, they are typically pegged to one currencies. That is the second one correct. The value of stable coins remains fixed at all times. No. If you clearly observe the pegging, if US dollar is pegged to any stable coin, obviously based on the demand and supply of these US dollars, the stable coin value will either increase or decrease, or sometimes even from the sentimental's perspective, investors perspective, it will be also whether increased or decreased. So this statement fixed all times, it is also incorrect statement. So second one is only correct statement for this question. So that is the discussion for stable coins, especially why it was in news and what are the regulations in India. Are there any frameworks are developing in India's to regard the regulation of this type of cryptocurrencies or stable coins, and also why it was necessary. So that we have discussed in this video. So if you have any doubts regarding these currency types and how it will work, so feel free to ask us in comment section. So that is the discussion for today's class. Thank you for watching class. Have a nice day.